had a really good day with lots of really good ranges, starting with this Tuesday. It's also a shortened week. So for us to get this kind of action right at the open, it was incredible. So the two stocks I was playing today was SPCE and also GNPX. These two were both stocks on my free weekend watch list, and I planned it all out already over the weekend. So come Tuesday morning, I'm just executing my plan that already worked out over the weekend. Nothing new. There's no such thing as just jumping in and just see what happens. I'm just trading according to my own plan. And in the long run, if you plan all your trades and you trade according to your plan, you will come out profitable. So the first trade on the day was GNPX. This one I actually started pre-market. The idea was to long the dips, risking $4. And I was actually looking for more of a flush towards the previous day's close to add to full size after the market opens. But we never got that. You can see the stock already started squeezing right before the open. I think 5 minutes before the open. And I was just selling some pops. You can see we never dipped after the market opens. The stock just kind of started working right away. Really soon after I got into my position here on the dips. And of course I missed a lot on the upside. I actually was thinking we would get 480, so $5 at most. And this wick candle on the second wick stopped me out right here. And in hindsight, of course, I should have let it work even with just a smaller position. But would have, could have, should have. So the next stock on the day was SPCE. This has been an incredible one that we've been playing for the last week and a half, just on the long side mostly, and also swing long as well. So today was the day we locked in all our swing position long, and it gave us a lot more than I expected. I thought we could get $30 most, swinging from all the way from $22. That was more than enough for me, but today was just incredible. I believe the stock at this point had about 20% short. So if you look at other stocks we've seen in the past, like CLVS and RAD, and really recently Tesla, it played out almost exactly the same way. Parabolic run on the long side, on the front side, and then we're gonna have a parabolic run to the downside as well. So look at those charts I just mentioned. You can see a lot of the similarities in price action. So I was long on SPCE all day. I was not shorted. I had some located short, but I never used it. So just really the idea is just to long the extended sell-offs towards the $30. $30 is the key area I'm watching on the daily chart. Anything above it, I consider it bullish. And I'm just longing all the dips and selling into the rips. And it's never one entry in and one entry out. I'm also adding to a lot of my core positions and building a solid position on the dips on the long side and selling into all the rips. And of course, I never sold the top. My best sell was around here, $36. That's something for me to work on. I'm selling into the major rips instead of holding on for too long. But I was thinking we can potentially touch $40, and that's why I didn't sell anything up here. But I was all out on the front side, and I went on break, and I came back. The stock was selling off towards midday, and I just longing the dips again. Really the same idea. I'm not doing anything fancy. Longing the dips towards the $30 area that was original watching. So I'm just doing the same thing really, longing the dips towards the $30 area. Also previous day's close, you can see how this wick literally touched previous day close area and got bought up really quick, and that's where I added back to full size. And even on full size, in the afternoon trades, I don't like to use the same size as I had in the morning. I already made money on the long side. So I'm only going back with a lot smaller size and just never gonna outstay my welcome. So just longing the dips and selling the rips on this one. I'm looking forward to see how this pans out tomorrow. I think, we're gonna get one of those RAD and Tesla parabolic downside now. So it'll be really interesting to watch how it goes from here for SPCE. Let's talk about my up on the day on LK first. So LK was a stock that I've been watching since the weekend. It was also on the free weekend watch list, and I was really bullish on it. Once we break the $40 level, we have a lot of room to the upside. So we were reaching a level yesterday on Tuesday. So today I was looking to play the continuation, and I was patient, waited for the dips, but I got stopped out way too early over here. And I was trying to give it some room to work around the previous day close area, also the 40-30 area, but it actually stayed extremely heavy, so I got stopped out over here. So I took a loss on the long side on the first trade here, but I was able to rethink clearly and try to gauge a re-entry after we reclaim VWAP, add it back in. And then the thing with me is that I understand myself. Once I took a loss on the first trade, when I come back, even though I had in hindsight, of course, it looks like amazing entries and amazing amazing ad. I really sold way too soon. And especially I had already prepared for it. I know the stock has a lot of upside to run on the daily chart. I shouldn't have just sold it this soon. And so that's something I definitely need to work on. I guess the best sell on the day trade was over here. And this is where I was started adding some position on the swing. So I have some here and some here, and also had some more on my actual swing account at the end of the day. So overall, LK, it's just a small win even after this and the swing trades, but I definitely should have performed a lot better on LK. Next stock, MYO. The first trade was also a loss. I accidentally shorted and had terrible fills, as you can see. So this is a scratch trade and took a loss on that. But the better trade was later on the long side, after we reclaimed VWAP and there's a lot of momentum coming in and volume. Just tiny scalps. If you look at this daily chart, it's what we call a bag holder chart. Lots of dilution and lots of longs trapped in here. So didn't want to outstay my welcome. Just longed for a few quick scalps and was able to get out before this heavy selling back down to VWAP. So saved myself a little headache on this one. Overall, what I realized is that whenever I had a really good trading day, which I did yesterday, the next day, a lot of times, and I get sloppy, as you can see with my entries and my fills, and the same thing on LK. So that's something I've noticed about myself, my own trading style. So that's why, once I kind of recognize that, hey, I'm getting sloppy, I'm not as precise and as patient as I was earlier, that's where I kind of take a little step back and just to be a little bit more careful before I jump into any trades later in the day. So we had a couple of earnings play today, but the biggest play today was SPCE again. But for the first time ever, I started shorting the stock today. We'll go over that in a little bit, but let's talk about my other two earnings trade today, stamps.com. So they had an amazing beat on earnings. Look at this daily chart. What a breakout. And what I was doing really was, I never really got to full size because the stock literally just after it breaks above the pre-market highs, it just took off. And there's no pullback whatsoever for me to add. And you can see I didn't sell at the top. I never sell at the top, right? So I had a starter size and I scaled out here and then I got stopped out by my stop loss, which, in hindsight, of course, was set a little bit too tight. The stock went all the way to 159 after that and I got stopped out around 147. But, I never got back in after the initial size, but it was just a little play on the day. The other earnings play was CAR. So similar idea, breakout chart on the daily. There's more range over there, but nice breakout. Similar setup as stamps.com. Earning speed, the numbers were good. So I was just playing. After we broke above the key level, this is $48 as a level from the daily chart that you can see all the way back there. Once we held that level, that's where I started scaling in and adding back to full size. After we reclaimed this VWAP, I liked this little push towards the highs and then pull back. Even though we pulled back, we still held the key level. And that was what I was looking for on stamps.com. And we never pulled back for me to add. But for CAR, we did. And that's why I started adding and added to full size, sold some and then sold some more here, and then I got stopped out with my stop loss on my final piece. So two very simple but pretty clean trades. The other one that was my main focus on the day was SPCE. I was long this one early on, but I was thinking today might have been the day that we start selling off because the telltale was the pre-market action. We squeezed all the way to $41, but this action from 41 all the way down to 36, 35 tells me that there's still long opportunities, which I did on the front side here before we turned red. But that just kind of tells me that I don't want to be too long biased. And I want to be ready if the tide turns to the downside because after all, we've been going parabolic for about 2 weeks now. And even after this blow off candle that everyone thought was the top, we still went a little bit higher today. But you just want to be cautious when, the action starts becoming kind of frothy. So I was longing the dip, selling to the rips. I got a little bit chopped up here because I keep on thinking that, especially after we put in this wick here, that tells me that, hey, there's a lot of selling here. We're not breaking with as much conviction as we had the prior days. So I got chopped up a little bit here, long some, and you can see I'm really quick to sell just in case this kind of stuff happens. And that's what I was prepared for. These are still longs. I was just longing the extended sell-offs and back towards the VWAP. This stock gives a really good range. range. Whether you're long or short, you have really good range for like $1 or $2 for every single move. So these are longs on the dips, and this is where I started shorting on this bounce after we went green to red. Pretty typical textbook setup where after we go green to red on the day, you short the bounces risking the previous day close. And that's why I went short, covering into the washes. Again, I don't want to be, too patient and to outstay my welcome on this kind of stock, especially when it tanked from $39 all the way to $30. And had some reshort on and really quick to cover because I didn't want to get chopped up in this kind of action. And then we just kind of started fading off. But, I like to trade the first 2 hours, 3 hours of the day, and I don't like to trade in the afternoon unless I see grade A setup, and I didn't see anything near the end of the day.